Today I'll be doing an analysis video. I'll be breaking down go trade from yesterday, how you would have cut a trade, this massive buy candle, and today's candle. Yeah, this is three process or three steps. Okay, so let's get into the video. You can see uh, this is setup for uh, as it's looking at time frame. Um, Initially, we would have got the trade from here, but we are not in the market when the market started moving from here, but we're able to catch the market from this point here and we went to 103 with 0.01 flat size. So let's break this trade down. I'm going to wipe everything off my charts. By the way, I'm using a derivative gold chart. I just went to search commodity and then um I got this chart. Right. So I start my analysis on 24 hours time frame. Where the highest time frame can go is 24 hours, which is okay. I don't need much, just 24 hours. Then I know what to look for. So the strategy is going to be based on three steps. First step is to find our rejection. That's the first step. And this is the candle of yesterday when I took the trade. So the first thing we do is we find the rejection. Let's say for instance we were not here when the market, opened and the rest. The market has not formed yet, but I will understand that this particular candle is my rejection, and we have this gap here. So from the closure of this candle to the open is an inefficiency in price, which is the gap. But it doesn't really matter with what I want to show you, or let's just make it as a reference point. So we have this, this is a gap, and we have this rejection candle here from Friday, uh, no, from Monday, yeah, rejection candle from Monday. So we have a rejection here, so I'll identify this as my rejection candle. After you find your rejection candle, the time frame you go to get a breakout, which is the second step. You have to get a breakout and we break out a point of interest, right? But then the first thing, remember, first thing, rejection candle, we have this rejection candle here. Second thing we do is go to a time frame lower, and for this I'm going to be using the 8-hour time frame. So on the 8-hour time frame, do you have a break? No, we don't. The break would have come from the break of this high right here. So let me take this off right now. So this would have been our break, right? But since we don't have that break, we would shift our focus from this daily rejection to this 8 hours rejection, so that when we go to a lower time frame, like a time frame that is, let's say, intermediate, or a time frame that we can connect this particular rejection with structure, and that will be like the 1 hour time frame. So the 8-hour rejection is what we just identified now, right? So on this 8-hour rejection, Our break of structure will come from this high, right? This is our break of structure. Our break of structure comes from this high right here. So that's our break of structure. Oh, sorry, I wasn't showing the full screen. So that's our break of structure that we'll look for. Then instead of using this 8-hour break that we didn't get, we use it as our target. Uh, we use that as our target. So we'll say we are looking for price or waiting for price to get to this high. So if we manage to get any setup from here, that should be where we are exiting, right? So this is our 8-hour rejection area also. So let's study this rejection. So you see, after we had this rejection candle here, we finally had this decision candle that broke this high, and then we expect a pullback into this level, right? Into this level. So this is what a V-shaped level, which would have given us a nice entry to push to the upside. But that did not happen. Okay, that did not happen. And there's a reason why, right? Meaning that as we got this break, price did not come here. The next candle we have should be like, we need to understand something. Now, if we don't get a particular setup at that time that we're looking for, we can just adjust to the market condition, because as the market is moving, it's changing its condition, right? So the next area that we would have used as our rejection would be this 1 hour inside rejection candle, right? Since we do not get this entry, the price will not pull back to this point. We will just use this 1 hour inside rejection candle as our rejection candle, extend it to this point here. So we use this inside rejection candle as a rejection candle. See, we have after now this break now will be more pronounced. Since it's a 1 hour time frame, we are using we are seeing the inside rejection candle. So our entry, our break of structure will be from 15 minutes. Our break of structure will be 15 minutes, just like you see it here. So this is our 15 minutes break of structure, and then this is our 15 minutes break of structure. Okay, 15 minutes break of structure, and then remember the V-shaped level we saw that we wanted to use as our entry. So this is our 15 minutes break of structure. You could use this. Okay, this in fact there is no point using this 1 hour break. So we have to identify our 15-minute break, which is this candle. I just hope you guys are getting it. So which is this candle? This is our 15-minute break, because after we've created this inside rejection, we had a break of structure, and then look at this massive candle has this opening, because it's the closest to, or should I say it was the most unfresh, right? Most unfresh, and we have this pullback that never completed into this A-shaped level. So this A-shaped level should initially be our first entry. So this is the entry I missed, right? This should initially be our first entry. We will enter here, enter here, So we're risking $10 or whatever you want to risk here. 10. It could be 10. Okay, let's just keep it at 10. Yeah. So we're risking 10, and then our take profits will be that it has high that we're expecting a break from. So this would have been our first entry. So this would have been our first entry, but that did not happen. So let's look at this entry here. This is where I took my entry. To explain why I took that entry there. So we'll go back to 1 hour. Alright. So on the 1 hour time frame, I had this inside rejection candle on the 1 hour time frame, right? Because it was so obvious that we are bullish. Okay, even if we are not convinced here that we are bullish here, this this particular 1 hour candle inside rejection will tell you that we are bullish plus the liquidity that we have on top here. Okay, so what I did on this 1 hour time frame was to identify this here. I was able to identify this inside rejection candle, right? And then when I jump to like my 15-minute time frame, I got the whole picture because I was able to find my break in 15-minute time frame. For some reason, it's not okay. So I got my break here. So this is the 15-minute break here, and this is that 1 hour inside rejection. So we can see that the obvious key level here is this A-shaped level. So A-shaped level was identified here and here, and then we got our entry. So risk $10, right? And then our TP would be the size for effective profit, which is like $32. So knowing that after this high we'll actually create a new all-time high, so it would have been better to just hold, like, so still going, and better to just hold your position because of the new all-time high the market just created. So these are just the two setups that you will have caught if you know these three steps. Right. So the first step is to identify rejection. Second step is to um, identify a break of structure. Then third step is to identify key level. So this is just the whole rule for trading this simple steps. So don't need much, just this. Then when we talk about time frame alignment, so if you have a rejection candle on the daily time frame, you have a rejection on the 1 day, right? Your entry will be on the 4 hours and or 8 hours. So your entry should either be this, right? Not like your entry should be this, which is when you find your break of structure, right, and key level. Okay, let me do this. So this is 1 day for to identify rejection. Then we have 8 hours here. If we have this in 8 hours or 4 hours for our break of structure and key level. So I think these two work hand in hand when it comes to the chart. It works hand in hand. So let me just say and key level. So they work hand in hand together. So when you identify the break of structure like this, when you identify your key level on the higher time frame, you identify the break of structure and identify the key level on a lower time frame. So it could be this, right? It could be this. So this is your break of structure, or this is your rejection candle, your daily time frame, your break of structure and key level will come from the 8 hours or the 4 hours. Then there are times that you may not really get to see this rejection properly. Probably market, when you go to the 8 hour time frame, you have your break of structure there, but you can't find it. You can just look for, you repeat the process, just make that 8 hour now or 4 hours the point where you find the rejection or you are able to identify the rejection, and then you use 1 hour for your break, right? So it's as simple as this. Okay. So this is for a daily setup. So if you want to do for 4 hour setup, or should I say 8 hours setup, then you have this 8 hours or 4 hours as your rejection. So you have it as your rejection. Yeah. So your key level now will be the 1 hour, 1 hour time frame. So the 1 hour time frame will be your key level, right? So this is where you now find your break of structure and identify your key level on the 1 hour time frame. So like this particular setup now, this setup came out from a this setup came out from a 1 hour from a 1 hour rejection inside rejection and a 15 minutes 15 minutes. You have a 15 minutes we had a 15 minutes break of structure and entry. So this is, we are still in the 15-minute time frame though. So this was our 15-minute break of structure and entry here. So A shape level as key level, then break of structure and entry from this break of structure entry, and then we link. Yeah. So this is the same process, break of structure and entry link. So it's very simple, just following this three steps and matching your time frames in the proper order to get the maximum potential of a particular setup. So these are the three steps or the three process of my trading setup. Okay.